If there's one thing we can all learn from the financial sanctions against Russia, it's how quickly cash can become useless, the access to your money restricted, and how easily central banks will confiscate your money and convert it to whatever works best for them. These three things happen to many Russian citizens in a matter of days, and it's a clear example of just how important it is to not only hold a foreign bank account, but to also hold physical assets. Because when you hold physical assets, a bank cannot decide for you to convert these assets at a very unfavorable rate, and they also can't prevent you from accessing those same assets. An added benefit from holding physical assets is that you can actually transport these more easily than the same value in cash, or when it's in the form of real estate, it's already at the location that you want to have it. Now, many people think that having physical assets is only reserved for the ultra-wealthy that have millions or billions of dollars in wealth, and that what's happening in Russia is never going to happen in the West.
Because of the economic sanctions, I couldn't transfer my funds anymore to myself from international account, so I was left out of rubles. Had to buy them from friends. I'm questioning if something goes wrong here, for example, or the economic situation worsen, how will I support my family financially? How will I transfer money? So it's a big question how we can do this.
Things like these can easily happen in Western countries as well, and I've personally witnessed a bank run that happened in the Netherlands when the CEO of the DSB bank mismanaged the company and around 400,000 people lost access to their funds. They did this to prevent a complete collapse of the bank. However, in the end, it didn't work and the bank still collapsed anyways. So you see, losing access to your bank account, whether it's due to financial sanctions, a global financial crisis like in 2008, or simply by mismanagement of the company, it will always hit the average people the hardest, since they usually have all their funds in one bank or in one country. Now, there's an easy way to protect yourself from this problem, and that is by buying physical assets, and there are several to choose from. The first and most well-known is buying physical gold. Now, this might seem challenging and costly at first, however you should know that you don't have to start with buying massive 400 troy-ounce gold bars like you see in the movies. These bars are usually the standard for big banks and weigh over 12 kilograms or 27 pounds, which makes sense when you're buying billions of dollars worth of gold. However, when you're buying gold as a private citizen, you can easily get started with as little as 1 ounce or even just 1 gram, of which there are about 28.3 in a single ounce or 31.1 grams in a troy ounce, which is the standard in the gold market and dates back to the Middle Ages. Now, the main reason for buying physical gold that we focus on in this particular case is that you have the ability to always access your funds. However, there's a major added benefit from holding physical gold, which is that it's actually a great long-term investment and a good hedge against investment risks.
We do believe that gold does very well in times of inflation. We saw what happened the last time gold went sort of parabolic was in the 70s when we had 2 years of double-digit inflation. And the reason why gold goes parabolic is that basically it's a very limited amount of investable gold. You have cash sitting in a bank that you're earning 0% on, inflation's 4%, you're gradually eroding the value of your money. So as inflation picks up, people try and get out of fixed income, they try and get out of cash, and the logical place to go is gold.
When you look at gold over the past 20 years, you will find that it has a very nice return on your investment and that it's on par with most S&P 500 ETFs and thus a very safe place to put your cash.
But remember, in terms of correlation with gold, when the S&P does drop or when equities do drop, what you will find is gold is negatively correlated over the long term. That's the important thing. And on the flip side, which I know everyone's ignoring right now, but when markets do perform well, it is positively correlated to equities. So it's a good thing to have in your portfolio, and it's an important thing to understand.
So when buying physical gold, you get the benefits of having your funds grow over time and the added benefit of being able to transport them with you to wherever you want, which means that you'll never be denied access to your own funds. Another great physical asset to have is silver, for which the same principles apply as with gold. The main difference is that silver tends to pull back harder than gold, which means that after large price increases, it can have large declines, and this means that in the long term, the growth of silver is a bit more dampened than that of gold.
And silver is lagging a little bit, but silver miners typically lag, but they play catch up real quick.
Over a long enough time period, you're still going to enjoy a huge return on your investment, making it a much better alternative than holding cash and giving you all the benefits of having a physical asset. Before we continue, please like and subscribe to support the channel. When deciding on whether to buy gold or silver, it all depends on the market forces at play at the time of purchase, since sometimes it might be better to buy silver when the silver market is down a lot, and when the silver market has enjoyed a rapid increase, it might be more sensible to buy gold.
This right here is over $120,000 worth of silver, and this is the equivalent in gold.
Next to precious metals, real estate is also a well-known physical asset that private citizens can buy. However, this is usually done for the purpose of investing locally and then renting out the place for some added income. In our case, we're looking at real estate for the purpose of safeguarding your funds and getting them out of a bad economic region, which means that a local purchase is out of the question, since this would not benefit you when you need to leave the country. In addition to this, buying real estate where you already live becomes even more problematic if you're leaving for economic reasons, since at that point, the property has most likely lost a lot of value and finding a buyer might be very difficult. For these reasons, it might make more sense to start buying real estate overseas in places where you might want to move to. This will allow you to have assets in a foreign country outside of the scope of your local bank or government, and it has the added benefit of servicing as a place to live for when you have to leave. Just like with gold and silver, real estate has the tendency to appreciate over time, making it much better than holding cash in a foreign bank account. Now, the sanctions against Russia demonstrate all of these benefits perfectly.
How can you feel that when in 2 days your business, your money, your money in the bank lost everything? I used to work in Europe and United States, so I have some savings in dollars. And one day when I come to bank, I just to take the money back. They tell me you can take only 10,000, and all other money we will convert to rubles without your acceptance. Moreover, the rate of the conversion is a government rate, not a market rate. So that's okay. I have no savings now.
Many Russians fled to Georgia and Finland. However, even though they had the funds to rent or buy a place, a lot of Russians still struggled with finding housing or even with simple things as opening a bank account due to the sudden influx of so many Russians. This shows that it's important to take care of all of this long before you actually need it. So again, just as with buying physical gold, you don't have to be rich to start buying real estate overseas. In most non-Western countries, you can easily buy property for less than $90,000. And even in most Western European countries, you can still find houses for less than $150,000 if you stay away from major cities such as Paris and Madrid. Now, the point here is not to get filthy rich or make a best possible financial investment with your money. It is to make sure that you have access to your money when problems occur. When you own property in a foreign country, you can also sell this when you are in need of cash, since the money will get deposited on your foreign account when it is free from a bank run or an economic collapse. So if you have $100,000 sitting in an investment account, but the stock market is closed due to economic collapse, then you can't get that money out, and if the banks are also preventing you from transferring your money, then the money is completely useless. However, when you hold physical assets, you can easily transfer these to a location of your choosing, and when you also own property there, it makes it very easy to relocate and finance your life with your physical assets until your digital assets become available again. This was the importance of having physical assets. Please like and subscribe for more videos.